If you've watched our full video on capital gains tax in Ireland, you'll remember that there is an annual €1,270 tax exemption that you can use to reduce your annual tax liability on any gains that you make in stocks, crypto, or property investments.
This exemption can only be used when you actually sell your investments, and it can't be carried over into future years. So it's either use it or lose it.
In this video, we're going to be explaining a bed and breakfast sale, which is simply a strategy that you can use to harvest your gains and reduce your overall tax liability at the end of the year.
Confused? Don't worry, we're going to go through it step by step.
I'm Steve.
I'm Cian.
And this is the Learnings Report, a show where we make investing accessible and understandable for everyone.
Today, we're talking about bed and breakfast sales.
What is a bed and breakfast sale? You're about to find out. A bed and breakfast sale, in very simple terms, is a way of reducing your tax liability so that you pay less tax now or in the future. The goal of a bed and breakfast sale is to simply increase the cost base of the shares that you own, thereby helping you to reduce your tax liability down the road. Don't worry, we're going to go through this with an example shortly.
So, why would you do a bed and breakfast sale? A bed and breakfast sale enables you to avail of your capital gains exemption so that you don't lose it in a year. You're basically selling your shares and crypto at a gain of €1,270 and then buying them back. One thing to note is that you have to wait a certain period before you can repurchase your shares back. And now we know there's a lot of conflicting information out there. We've seen people say that you can immediately repurchase them back. We've seen people say you have to wait 4 weeks before you can purchase them. And we've also seen 30 days being thrown around. We've done our research and we've contacted Revenue and we're still waiting on an answer. But our best bet is that it's either 28 days or 30 days that you have to wait before you buy your shares back. So to play it safe, you should probably wait 30 days before purchasing your shares back. If we do get an answer from Revenue, we'll be sure to leave it in the comments. But for now, we recommend waiting 30 days before you purchase your shares back. During this time, you do run the risk that shares will increase above what your total savings would have been as a result of carrying out the bed and breakfast sale. So keep this in mind when choosing when you want to use this strategy. Of course, there's also a chance that your shares could decrease in value compared to what you bought them for originally, meaning that you get to save on the bed and breakfast sale and buy the shares back for cheaper. But again, you just don't know how this is going to work out. It's worth noting that for more established companies, their share prices probably won't fluctuate too much during 30 days, but for small high growth stocks, they could fluctuate considerably, so do take this into account when choosing which shares to sell. Lastly, remember you don't necessarily need to make a bed and breakfast sale at the end of a year, but if selling shares, you may want to avoid selling around the time of a big earnings goal, as a company may announce positive news and send your shares soaring, or negative news that sends them downwards, which actually could be lucky for you. At the end of the day, choosing when or if you want to make a sale is entirely up to you. Do note that with this gain, you'll still need to file a CGT return, albeit you won't have to pay the taxes as you'll come under the exemption. 3
important caveats to the bed and breakfast sale. Firstly, the bed and breakfast sale really only applies to shares or crypto that you didn't really plan on selling in the first place. For example, I might own shares in Apple and I want to sell them towards the year end to harvest my gains and to reduce my tax liability, but I still want to hold those Apple shares in the long run, so I'll repurchase them. Secondly, it's really important to remember that the €1,270 exemption is across all your investments. So you need to take the total of your stock investments, your crypto investments, and other investments, and that all needs to fall under the €1,270. And of course, just remember that if you've made any other sales of your stocks or cryptos during the year, you may have already used your exemption, so you can't do this in addition to what you've already used. So unfortunately, you can't simply double it up and get one exemption for your stocks, one exemption for your cryptos, or anything like that. And the third caveat is you do need to factor in trading fees and stamp duty when figuring out whether a bed and breakfast sale is worth it, but due to low cost brokerages and low trading fees these days, it's not as relevant. And of course, stamp duty is only applicable to UK and Irish stocks. US stocks are free from stamp duty.
Let's take an example. It's March 2020, the pandemic has just hit and the markets have crashed.
But you are a savvy long-term investor, you see an opportunity and you decide to make some purchases.
You end up buying 10 shares of Netflix stock at a value of $250 per share. Your total cost is $2,500.
Quick note, for the sake of the example, we're making these numbers up.
By December 2020, the market realizes that although the pandemic is a huge deal, lots of people are stuck inside watching Netflix, and the share price of Netflix has now increased to $500 per share.
Again, to reiterate, making these numbers up.
So, your shares have increased in value by 100%. Each share has basically gained $250. Your investment is now worth $5,000. Although you have no plans to sell your Netflix shares over the next 5 to 10 years, you realise the end of the year is approaching, you have an annual exemption, and that you can't carry that forward to the next year, and you're either going to use it or lose it. For the sake of the example, let's assume that you haven't made any other sales during the year 2020. You decide to sell 6 of your 10 Netflix shares at $500 each in order to utilise your tax exemption. The total sale value is $3,000. You have made a gain of $250 on each share you own, so that's $250 by 6, which is $1,500. At the time of recording, $1,500 is €1,231. As you can see, this is under your threshold of €1,270, and therefore it is exempt from CGT at 33% for the year. You then simply repurchase the exact same shares for more or less the same price, and for the sake of the example, let's just say this is $500 again. Then you sit back, relax, and enjoy an episode of Gossip Girl.
Such a good show.
So good. This sale and repurchase is essentially your bed and breakfast sale. So now we have 4 shares of Netflix with a cost basis of $250 and 6 shares at a basis of $500.
Still with us? Don't worry, we're nearly there. It's now 5 years later, the year is 2025, and Netflix shares have been performing really well. Each share is now worth the value of $1,000. You're now a little bit older, you want to put down a down payment for a house, so you decide to sell all your 10 Netflix shares for $10,000.
So hypothetically, and just to highlight the point, if we hadn't done the bed and breakfast sale, our total gain would be the 10 shares all sold for $1,000, and this would equal $10,000. The cost of the 10 shares at $250 is a total of $2,500. So this would mean our total gain is $7,500. In euros, this is €6,157 at the time of recording. So this year, we also get an exemption of €1,270, so we can apply it to the €6,157, and we therefore then get a chargeable gain of €4,887. By applying the 33% CGT, we get €1,612 of tax due. Remember this number for now, as we'll be highlighting the difference in a minute. But because we did a bed and breakfast sale, we raised the cost base of 6 of our Netflix shares. So on these 6 shares, the gain would actually be $1,000 minus our new cost base of $500, which equals $500 of a gain. So on these 6 shares, our total gain is $3,000. We can then add this to our gain on the other 4 shares, which is the $1,000 minus the original cost price of $250, and this equals a $750 gain on each share. Times this by 4 and we get a gain of $3,000. So if we add both the gains of $3,000 and $3,000, we get $6,000 of a total gain. So this $6,000 compares to a gain of $7,500 on the previous example. $6,000 at the time of recording in euros is €4,925. So if we take away our exemption this year, this comes to a chargeable gain of €3,655. The CGT due at 33% is therefore €1,209. If you remember from our previous example, the CGT due was €1,612, and this time it is €1,209. So the difference is €403. This €403 is basically the money that you have pocketed from doing the bed and breakfast sale. I know that's a lot, but just to summarise, in both scenarios we made an actual gain of $7,500. However, with the B&B sale, we leveraged our CGT exemption to make $1,500 of our gain tax-free in 2020. And then basically, we're only taxed in 2025 for $6,000 of the gain, rather than $7,500 of the gain, which reduced the CGT due overall. Had you not done the bed and breakfast sale, you would have €403 less. And important to note that we only did the bed and breakfast sale in this example for 1 year. In theory, you could have done this in 2021, 2022, 2023, 2024, and availed of the exemption 4 more times over that period. And this would basically be an extra €400 each year in your pocket. And just to clarify, the max amount that you can save on an annual basis is €419, and this is basically 33% of €1,207.
So for those not as mathematically minded as Kino here, all you need to remember is use the bed and breakfast sale every year to make the most of your tax exemption, as you'll have more money as a result.
Joking aside, The bed and breakfast sale is only relevant if you haven't already used your exemption or you aren't planning on using it for the rest of the year. So just keep that in mind.
One question we get a lot is, what if you made a loss on the shares that you sell? Well, if you do sell shares at a loss, you can offset those losses against your gains on other investments, but only if you do not repurchase the exact same shares within a 4-week period. You can, if you wish, reacquire those shares again, but it just needs to be after the 4-week period if you wish to offset them against your gains.
The bed and breakfast sale is one way to reduce the total amount of taxes you pay when investing in shares and cryptos, and there are plenty of other ones, and we'll actually be launching a video on this in the coming weeks.
If you have any questions on the bed and breakfast sale or anything else we've covered in this video, do let us know in the comments below, and if not, see you in the next one.
Yeah.
You're getting a little bit older, you want to put down a payment for a cat.
A cat. Or a millionaire.
The cat millionaire's back. You're now a cat.
Down payment.